And good morning, everyone, and welcome to Options in Minutes a Day. You guys are going to love what you see today. You'll love the ability I'm going to put at your fingertips to be able to do complex option type strategies in just minutes a day. Minutes. Really, really easy stuff. First, let's stop and just review a risk disclosure. Uh, I think everybody's comfortable with this, you know this, but there is risk of loss in trading commodity futures and options, and it can be substantial. All funds committed should be purely risk capital, and certainly past performance is no guarantee of future results. And again, I think you all know that, but it's a good reminder for us as we walk through trading and talk that way. Now, I have a couple goals today. My goals, really, I want to reveal this secret weapon that institutional traders and professionals are using. Reveal something that's very new and valuable and immediately accessible to you. And it's designed to save you grief, time, and aggravation and money, right? That's the idea here. Now, I also know how hard it is to sit in a webinar and listen to this and not have all the thousands of distractions that go on. I'd much rather be in front of you, or we can go back and forth in conversation this way. But I promise if you'll stay with me, you're going to experience something new and very valuable. You'll have that aha moment where you find that thing you've been looking for that you really didn't even know it existed. This will help you gain insight into your own investing, and I think you're really going to be inspired here. I also know what you're thinking. Okay, yeah. I've seen a number of these. What makes you any different than the last one I attended? Well, everything does. We only provide what you need, what works, and nothing more. We're not going to put a whole bunch of bells and whistles in front of you that you don't know how to use and you can't take advantage of, right? This is me. I've been in the industry since 2004. I've had a chance to be in nearly every state teaching these principles and showing people how to trade options really quickly in just minutes a day. Over the years, since 1997, a little bit about our company, we've traded millions of contracts, millions of options. All of our staff have a minimum of 13 years of experience. Now, we're regulated by the NFA and CFTC, and we have staff in California, Utah, and Illinois. Why do I bring that up? Well, let's talk about a couple things. This is an image I like to throw up in front of people and ask, okay, are you here to be this guy? Are you here to be this mad scientist guy that's really going to build a trading strategy from the ground up and is gleaning every bit of information they can get? Or are you really trying to get that information from people who have already done this? And I think the large majority, almost 100% of us are looking to get some information from those who have already done this and try to avoid this hard period of building something, right? All the mistakes that come with it. And so I bring up our history to talk about really what's going to be at your advantage. And think about it. Over the years, we've done a lot of things right. And at the same time, we've experienced and done and seen a lot of things done incorrectly, right? And the things that don't work. And Thomas Edison's quote that I like here, I have not failed, I've just found 10,000 ways that won't work. One of my favorite commercial series is the farmers commercials, right? Because I can really relate to it. We've seen a thing or two, we know a thing or two because we've seen a thing or two, right? Usually as you see these commercials, there's some outlandish, crazy, position or scenario is what I'm trying to say in why somebody needs insurance, right? And you think, okay, that's crazy. But really, I'll bet if you were to actually research it, they've probably actually experienced that. They've been around for a long time, so they know a thing or two because they've seen a thing or two. And that's how we feel here. We've been around for a long time and we've experienced a lot. And I think we really know quite a bit as a result. So we're going to focus on things that work, take those mistakes, throw them overboard, and like I said, focus on the things that work and keep it simple. Now, I'm going to use this slide a few times today because I really want to hone in on the idea for all of you that this is simple. You don't need to be a pro, and you don't need to be novice. This applies across the board. It's designed to save you time, and you don't need to sit in front of your computer. Now, over time, we've learned that there's really 3 secrets of option trading success. And secret number 1 is experience and education do matter. And I've spent some time talking about that, right? We're putting all of our experience in one place. This is me years ago when I first started trading options. Found it very easy, didn't know enough, made all the common mistakes, and quickly watched that go away. You're going to have access to people like Steve Paletti, S&P options floor broker for nearly 40 years. You think he knows a thing or two? Charles Starnes, head of operations, 33 years of industry experience. Mike Armbruster, our two principals, 24 years, and Eric Gebhardt, 27 years of industry experience. All of that's going to be available to you. Secret number 2, full-time trading is not glamorous. You have a day job, family, life, other interests. Do you really want to be behind the screen all day trading? This is what a professional trader looks like, right? Whether it's 100 monitors here or just a couple, right? Do you really want to spend your time looking at charts, looking at information all day long, trying to figure out where you're going to get an edge with your trading? You have your own jobs, your personal affairs, daily routines, things that you probably would rather be doing, but you're looking for maybe this carefree lifestyle that seems to be associated with the full-time trader, right? Whether it's a beach or some other destination you long to be, I think it's that carefree idea that it makes us think that full-time trading is glamorous, and it's really not, right? And secret number 3, how good are you at picking market direction? It's really hard to do, right? Think about it. The trading strategies that always rely upon picking an up, down, or sideways market direction requires that you correctly do all of the following every time. Think about this. You got to do them every time. Pick the correct stock or market, choose the correct market direction, build the correct strategy, enter at the right time, the right price, and be able to manage those risks and gains each time. So how good is your crystal ball, or how good are the experts with their crystal balls, right? Here's some of my favorites. 1988, the internet will have no impact on investing. How silly is that? Paul Krugman, Nobel Prize winning economist. 2013, and we hear calls like this all the time, but Netflix is still way overvalued, and we all know the story of Netflix. Jim Cramer, everybody knows him, right? Concerned caller back in 2008. Should I be worried about Bear Stearns? And his answer is simply no, 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 don't move your money from Bear. Let's take a step forward. You have, because he's so well known, he's got a morning show and an afternoon show. You have people that actually go out and do paper trading accounts and test things, right? So April 6th bought $1,000 of each secured on Cramer's list in a paper trading account. 6 months later, only 14 of Cramer's 49 stock picks closed higher. That's a 28% success rate. That's much less than a coin flip. And I bring this out to be silly a little bit, but I want you to really think about this. Excuse me. Simulated results of 100 monkeys throwing darts at the stock pages in a newspaper. The average monkey outperformed the index by an average of 1.7% per year since 1964. Bert McHale claimed a blindfolded monkey throwing darts at newspaper financial pages could select a portfolio that would do just as well as one carefully selected by experts. McHale was wrong, stated Rob Arnett, CEO of Research Affiliates. The monkeys have done a much better job. Now, I bring that out to be a little silly, find some humor in that, but really to help you see that picking stocks is really quite hard. Picking direction and knowing what's going to happen is hard. What we're going to focus on today is really simple. You don't need to have any experience. It's the same type strategies the pros are using, and again, it's going to save you time. Now, let's review real quickly. I know I have a vast audience here, so you probably have some very experienced traders to novice. We're going to cover just the basics of options real quick. I'll give a couple scenarios and we'll get on moving here. So what are options? Options are financial instruments or tools associated with stocks, commodities, and other assets. They can be bought and sold in anticipation of the underlying asset price moving in the predicted direction. There are two types of options: call options, which are the right, not the obligation, to buy the underlying asset. There are put options, the right, not the obligation, to sell the underlying asset. There's a strike price, which is the price where the option can be exercised. There's premium, which is the money paid or collected by the buyer or seller. There's an expiration date with an option. It always has so there's time value built in, so there's always an ending to that option, right? There's always an expiration date. So there's buyer and seller. Buyer is considered long. The buyer pays the premium to the seller. The seller is considered short. The seller collects the premium from the buyer. Now, I wanted to give a little scenario that I think is a little easier to understand by using maybe real estate. You can put your head around the concept of an option real quickly. Let's suppose we have land worth $100,000, and we want to buy the land for $110,000 within a year. The owner of the land sells us a call option. You pay $8,000 premium for the right, not the obligation, to buy it for $110,000 between now and expiration. The strike price is $110,000. The premium paid is $8,000. Expiration, 1 year. So if the land value moves to $135,000 within a year, you may want to exercise your call option. Your option is now in the money by $25,000. $135,000 value minus a strike of $110,000 gives you a gain of $25,000. But you paid $8,000 in premium up front, so that's a net gain of $17,000. The call option seller lost $25,000 on the land appreciation, but gained $8,000 premium received up front, so a net loss of $17,000. So that's the basics of an option, right? Hopefully that gives you a little view of how it might be used. Let's talk about an index. Again, I think something that's commonly understood, especially here. We talk about it all the time, but Investopedia says a market index is a weighted average of several stocks or other investment vehicles from a section of the stock market and is calculated from the price of the selected stocks. Market indexes are intended to represent an entire stock market and track the market's changes over time. There are three major indexes that we always refer to, right? You hear them on the news: Dow Jones, NASDAQ, S&P. Whether it's a radio you listen to, TV you turn on, internet, always showing how the indices are performing, so you get a feel for what you think the market's actually doing, right? What are some of the values of an index? Well, they're very, very liquid. They're heavily traded by the pros with tight bid offer spreads. They're convenient. You can follow one or a couple indices rather than thousands of ETFs or mutual funds or stocks. They're diversified. It's a basket of stocks, right? Rather than just one. And therefore, it's also less volatile. A large move in a stock index might be 3% in a day. And we've certainly seen some of those giant moves over the last 2 quarters. But a large move in a stock can be 10, 20, even more in a single day. So a big difference in terms of volatility. Let's take a look at Tesla over the S&P over the last 5 years. You can clearly see that blue line is the S&P. Short time comparison, take the NASDAQ, and we'll compare it to Facebook. Facebook, July 2018, 5-day period, Facebook closed at 217.50. 5 days later, closed at 171.06, a loss of 21%. Meanwhile, the NASDAQ, that same period of time, closed at 7,932. 5 days later at 7,630. That's a loss of 3.8% compared to 21%. A lot less volatile, right? Also, indexes, they may be non-correlated, meaning just because a stock that composes that index is up or down doesn't mean the index is going that same direction, right? So an individual stock may be up while the index as a whole is down, and vice versa. Here's an example. This is Under Armour, trading December 6th midday at 23.90, up 2.4% on the day. At that same time frame, the S&P was down 1.6%. So you can see there's not necessarily a correlation to the components of the index that make it go straight up or straight down, right? So options, indexes. Next food for thought here we're going to give you is insurance company. Have you really thought about how an insurance company makes money? Their goal is to receive more premiums compared to that of claims, right? If they're going to make money, they have to do it that way. They are paid to assume and manage calculated risk. They sell time. They're forced to be patient. They need to insure themselves. They're consistent in their business plan. And they use probabilities, otherwise known as favorable long-term odds, right? So the insurance company puts all these components together. Well, what about a casino? We always talk about trading with the house's money or being the house, that type of thing. Well, let's take Do you think that the casino understands every game they have in there and what their odds of success are when they go against you and I? Let's take the simple game of roulette. If you were to bet 38 times on a single number, if you win once and lose 37 times, the winning bet pays you 35 to 1. You'd win 3,500. Lose 3,700 on the other 37 losing spins, that's a net loss of $200. That's an average loss per spin of $5.26. The house has an edge of 5.26%. Do you think they know that number? Of course they know that number, right? They also know they'll pay out winnings at times and sometimes large. But they know when a group of us, if this entire class webinar came walking into the doors in one of the casinos, do you think they would be excited or be like, whoa, boy, I hope this is the day we pay out big? I think they know their odds, right? They know their odds of success, and that's how they view it. And that's why those buildings continue to grow and the lights are always on. High probability trading, many base hits, not swinging for the fences. Have you really thought about that with your trading? Let's take a comparison. Rod Carew, 72, he led AL in batting, hitting 318, had no home runs. In 75, Carew won his 4th consecutive AL batting title. He joined Ty Cobb as the only players to lead the major leagues in batting averages for 3 consecutive seasons. In 77, Carew batted 388 and won the 1977 AL MVP. He had finished in the top 15 in AL MVP voting in every season between 72 and 76. How awesome is that, right? When you're talking about base hits and not being a big-time slugger, always hitting home runs. Would you want to do the same thing with your trading? Would you want to be able to use strategies that collect base hits? Knowing you'll pay some claims at times, sometimes large, but the goal to receive more premiums compared to that of paying claims. Many base hits, not swinging for the fences, should equal a high batting average. Be the house. Insure yourself and use the best tools and technologies to make this happen. And this is what we're going to introduce to you today. Best part here, limited time commitment. And I know what you're thinking, well, I don't know where to start, what I'm going to sell, what am I going to do, where the premiums come from. Don't worry, we'll get to all of that. But wouldn't we want our ideal platform to try to avoid picking stock direction, since we know how hard that is? Wouldn't we want it to automatically generate strategies, collect premium, and automatically manage the risk and profits in the trades? And be the one tool that we actually need and be simple with little time required and be able to apply it in bull, bear, and flat markets? Well, here's what our clients say. With my busy schedule, AltaVest is the ideal platform. It allows me to see how my trades are going in an instant. I love the trade alerts that keep me informed when I'm traveling, and the staff are always there to help when I am in need of more information. This is certainly what our goal for you guys to experience the same thing. Okay, so we've talked about options. We've talked about indices being less volatile, and we'll bring this all in. Talked about insurance companies, right? Playing for base hits. Let's talk about credit spreads, right? The reason why you're all here, learning about credit spreads, income generation. Okay, credit spreads may be non-directional trades. They're an insured position. They have a maximum reward which is equal to the premium collected minus any commissions or fees. They have a maximum risk, which is the difference between the short and long option strike prices, and the maximum risk and reward are predetermined. So there's no naked options. You may have heard that term. That means they're not covered, that the risk could be unlimited, I guess. They're always covered. So maximum risk is capped. Don't worry about that. We don't use that term. We don't need it because we don't do it. So this is a visual of what a call spread would look like. The red line is a sold call at 28.75. The blue line is a bought call at 28.95. So I sell a call and I turn around and buy a call a little further away from the market. That gives me a net credit is what I'm trying to do. And I'll break this down, but I wanted to kind of explain this visual. If I sell that call there, I don't want the market by the given expiration of the options to go higher than 28.75 by that time period. So long as it's lower than 28.75 by the expiration, I keep the money I was paid. So let's break this down. To sell a call spread, you short a call and buy or long a higher strike call, known as a bear call spread or a vertical spread. The bear call spread is bearish to neutral strategy. You collect premium by selling calls. You limit the risk by buying a higher strike price call. You have a maximum reward, which is the net credit minus the commissions. So you sell a 28.75 call at 4.5. You then go long at 28.95 call at 2.25. That leaves you with a net premium collected of 2.25. Okay, that's what you're making the whole trade for. You're trying to collect that premium. Same thing with puts. I can sell the put, the red line, 26.15. So I don't want the market to go below by the given expiration, 26.15 on the index, and that's what we're referring to. In this example, it's the S&P 500. I turn, and because I'm always going to be insured on the position, I buy the 25.95, so I have a maximum risk and a maximum reward. So let's look at it. So I short a put and I buy a lower strike put, known as a bull put spread or vertical spread. The bull put spread is neutral to bullish because, again, I don't want the market to go lower than that 26.15, right? I collect premium by selling the puts. I limit the risk by buying a lower strike put. I have a maximum reward, which is the net credit minus any commissions or fees. So if I sell a put spread, let's take a look at an example. Let's say I sell that 26.15 put for 3 points. Well, I'm going to protect the position by buying a 25.95, so I'll give back 1 point, leaves me with a net credit of 2 points, which is why I'm placing the trade. I'm looking to collect that 2 points. If I were to combine selling a call spread and a put spread together, that would be known as an iron condor. A lot of you have probably heard that term. It's just the combination of the bull put spread and the bear call spread. Really that simple. It's designed to be non-directional, right? To collect premium. We want the index to stay between the short call and the short put, like this visual here. If I sell that call at 29.30, which is the red line, and I sell the put at 23.50, which is the red line below, I want the market over the given expiration to stay within those parameters. So why use this? Well, if the experts can't pick stock direction accurately, consistently enough, should we be trying to do the same thing? Or should we look at maybe selling some option spreads and using some high probability trades to create some consistency in our trading? Let's talk about probabilities and options here. So delta is a term you'll hear often. It's a chance of the option expiring in the money. So an example, if I have a delta of 25 at the moment, that means there's a 25% chance that that option will expire in the money. For the scenarios we're talking about, if I sell a put or I sell a call and I have a 25 delta on that put, that's a 25% chance that at expiration, that put would be in the money, which is what I don't want it to do, right? It means it's past my strike. Vice versa, there's a 75% chance that that put will expire worthless. Delta isn't static, so it will increase or decrease as the underlying asset moves and as time goes by. Time decay, another component, a big component of options. Option is a decaying asset. It has a very limited time span or a lifespan. Option traders refer to this as theta. Unless the underlying asset is moving favorably, the option price or premium is zero at expiration. And by selling options, we can take advantage of theta decay. As you look at this chart, you see how an option value is really built. In the beginning, there's a lot of value. As time drops out, it drops out increasingly fast, right? And you can see that there, known as theta decay. So we love boring, right? We want your trading to be as exciting as watching paint dry. Pretty silly comment, but it's very, very true. Okay, especially when we're selling. We just want it to be boring, let some time kick out, and collect monthly payments, right? If you want to call it that. Collect our insurance premium from the buyers that aren't using their insurance. So what about instead of picking stocks, we focus on a mutual fund because then you feel a little bit better that way? Well, here's an interesting article done by the Wall Street Journal on the Morningstar, which Morningstar gives mutual funds, or they give mutual funds up to a 5-star overall rating. So the study showed that of mutual funds awarded a coveted 5-star overall rating, only 12% did well enough over the next 5 years to earn a top rating for that period. 10% performed so poorly they were branded with a rock bottom 1-star rating. Here's the interesting note. As you look at the chart, for all of the measured periods of time, 3, 5, and 10 years, 5-star domestic equity funds were more likely to turn in a 1-star performance than a top one. Does this help, or does it leave you confused? And you're not any different than me, right? It leaves you confused, and then you're still dealing with your own anxieties in trading, right? Fear, hope, greed, frustration, boredom are big problems, big pitfalls when it comes to our trading. Then here's an interesting comment by Mark Lindheim. He's head of strategy at Alexander Forbes Investments. He says, unfortunately, humans are all wired with this built-in bias, which can lead us to make poor investment decisions, such as chasing past performance and or selling out after market correction for fear of losing more money. We're all wired the same. And you see, we buy the highs and we sell the lows, and volumes come in, and it's crazy, right? But I think we have that same tendency that's innate in most of us. How does your calendar look? Does it look like this? You've got everything, and you're still going to squeeze in your trading. Do you have all the right tools, but don't really know how to apply them? Do you tend to overcomplicate matters? I mean, we've got a big group here, so maybe some of this applies to some of you, maybe it doesn't. Do you understand this? This is pretty complicated, right? We tend to do that. If you want to talk about overcomplicated, let me show you this. I'm going to show you one option expiration and all the choices you could pick from to buy or sell. Let's just take a look at one. I'll play through this and show you how many choices you have. Do you know what you should be buying and selling? Does this make it easy? I think you get my point. Like the farmers guys, right? We've seen a thing or two, so we know a thing or two, and we're going to help you avoid being the crash test dummy here. Now, the secret weapons is here. It's entirely revolutionary. It's an awesome new way to trade your options. It's called Theta Trader, and it's income generation, right? We're going to focus on selling time. We'll use option spreads. They're automatically created for you. Proprietary algorithm that creates what we call theta trades. It's the same strategies that sophisticated traders and the pros use. Allows you to trade in bear, flat, bull markets. And now you have an automated RTI, which is your risk and profit management tool. You guys will love this. A superb trading platform, and I applaud the attempt to make it even better. It allows a person who has minimal trading experience to enjoy the benefits of sophisticated trading, including the use of options with futures. Now, before I get into demo, I want to call you to take action. A quote I really like by Tony Robbins says, change is inevitable, progress is optional. I think the idea that you're taking time out of your day to be here is you're looking to make that change, be that proactive, right? So when you see what you need, take some action, right? So enough from this. Let's go in and show you how Theta Trader works and how it's going to change how you trade. I'm going to go back and forth and change my screen. And then I'll change it on my end so I can see it better. You're now looking at Theta Trader, and I'll grab a pen and walk you through this. Okay, Theta Trader, when you log in, you'll see the dashboard just like you see it here. And you have in the upper left-hand corner, you have Theta Trades. These are the pre-built sophisticated option spreads, right? The iron condors, the vertical call spreads, put spreads that we just went through. And you can see that listed here. You have trades for neutral, which will be just what we're talking about there, right? Iron condos, verticals. Bearish trades. If you're bearish and you want to be directional, or bullish, you want to be directional, you have trades built for you. You can adjust them or just take them as they are, but they're right there, minutes. You then have the open sold positions area. So anytime you place a trade, you now have a tracking tool. I'll walk through this here so it makes sense to you. So when you log in, you see, okay, do I need to be taking action? What should I be doing if I'm doing anything? Otherwise, I'm out and moving on and getting back to my daily routine. You have the current markets, how the markets are going at the moment. The S&P 500, the NASDAQ, the Dow, the Russell, all listed so you can see what's happening. And then you have your account information. So you can see without toggling back and forth between multiple pages to see how your account looks. It's all right in front of you. Market value, available capital, all the information you'd want to have right in front of you. So I mentioned earlier, it's everything you need and nothing more. So none of the bells and whistles you really don't need. designed to be very, very simple. When I log in, I want to see how my trades are doing and what kind of trades to look at. And maybe I'm looking for a new trade. All I have to do is come in here and click on the strategy that I want. So let's say Iron Condor, because that's what we're talking about, income generation, whether that's an Iron Condor or a vertical. That's right here. And you can see it populates a number of trades for me. Anywhere from a weekly trade, a couple weekly trades here, you see that, and then some high probability longer term trades, all listed. All I have to do is pick which one I like best. I select it. Let's see here. Let's say we like, whoa, I don't know what I just did, but did something. I just changed my screen, didn't I? Maybe I didn't. Okay, there we go. Okay, so you can see here, if I pick, and it doesn't matter, let's say it's this 65-day trade. We'll pick this just for fun. Once I click on it, all of the information is going to populate below. I'm going to change it to a quantity. It'll always default to the smallest quantity. I'll change it to a quantity that probably our clients would trade, a 5 or 10 lot. Let's use 5, and pull out the pen and walk you through this. So it shows you can see it says Iron Condor here. You have puts and calls. If you just want to do a vertical, if you just wanted to sell the calls or just the puts, you'd click here. It'll populate that information. And then we'll get to the chart here in a second. But you've got the market traded. How many days are left? The expiration date, so that's the 31st of May. What the market is doing. You have the cash required, $4,567 to place this trade with a net profit after commissions of $432.50. That's a return on my cash of just about 9.5% and annualized at 53 over this 65-day period. Okay, that's how that reads. Now it's telling me exactly what to sell. So I sell a put at 25.20. I sell a call at 3,000. I buy a put at 2,500, and I buy a call at 30.20. It's telling me exactly what to do. It's all right in front of me. Now notice, Delta's even listed here. Remember we talked about that for a minute. So the put, the 25.20 put has a 9.7 delta. That means there's a 9.7% chance that by expiration at the moment that this would be in the money. Also, that means there's what, a 92% chance that it will expire worthless, which is exactly what we want it to do. And look at the call here. You can see that here. So you can see even better odds there. That shows you the delta, kind of showing you what's happening as you analyze these trades. Now, one part I want to go through, and this is probably what you do earlier before even going through the details there. You can see real quickly by clicking on the chart how the trade is set up. You can see the sold call. It's the 3,000 with a 25.20 put, and you can see the S&P over the last 60 days. So you can compare that chart and see, okay, how does it compare to where I'm setting up, and do I like this? Yeah, great. It looks good to me. I don't have to toggle back and forth between a whole bunch of pages to chart some things and then come back here and look at it. It's right there in front of you. Okay. So assuming I like it, I just hit place. Really that simple. Now this is a demonstration account, so it's going to immediately fill the position. But if this were your account, it has now placed the position. That simple. It's placed, working. You're waiting for the fill. As soon as you get the fill, it comes back in and populates right to your dashboard. Because you place a trade now, you got to have something tracking it, right? You got to have something monitoring that trade, and this is exactly what's going to happen. It's going to go right to your dashboard in the open sold positions, and you can see it right there. 65-day trade, 5 lot we sold, 25.20 put, 3,000 call. Yeah, it doesn't show me the buy because it knows I'm only worried about these two things, but it's all there. And now I have a risk thermal attached to it, which I'll explain now. Before I go into that, just so you know, with the open sold positions area, on the dashboard, it's only going to give you kind of the key ingredients of what you really need to know. How many days are left, DTE, 1 day. 2 days on these two trades, 9, 16, so forth, 30, right? 34, tells you what's going on. It also shows you your strikes. I pointed that out here, showing you the sold call and sold put, the areas that you would actually be worried about the market going. So it gives you that, and then it says the PC. This is a percent captured. So in this scenario, it says that even with 1 day, which expires today, and this will be based on what the market's doing, this is going to be 100% profitable. This is weekly trade, so it's going to be a little bit more volatile than your normal high probability trades. But this showing me that of my, let's assume I stood to make $400 on this trade. This means that I'm down about $400 on the trade. I'm negative 105%. This means I'm 93% profitable of my maximum potential. So let's say if it was $100, then I'm $93 profitable of the trade. I only have $7 left to make. I should look to bank that trade and move on, right? I don't need to sit in it through expiration. So the dashboard is designed to give you that condensed view. If you want to see details of each trade, all you do is click on the area here and choose the trade you want to analyze. And let's just take a look at this 9-day trade here. I'll highlight it by clicking on it, and down below it populates all the information. It populates my entry, my fill prices, shows me my chart, how things have gone so far on the trade, and I can go back and look at the history as well. Let me walk you through, and I can exit this trade from here, so I can click on the exit button and choose what I want to do. Do I want to get rid of the, buy back the whole condor, or am I just wanting to buy back just the calls or puts? Do I want to adjust the position? All that's there. Easy stuff to get and do. Now let me explain what you're really seeing here with the RTI. Whoa, I'm blowing that up for you. I don't know why. Okay, so the RTI here. I'm going to pull up a different screen so I can explain it a little bit better. Okay, this is the RTI. This is your tracking tool. This helps you decide each day whether you should hold a position or whether you should be getting out of the position. Really that simple, okay? It's color-coded to keep it simple. The idea is to keep the emotions out of the game. So if I log in and I see my trade and it's green, like these here, right? No action needed. I'm just going to, if I'm not looking to place a new trade, I'm logging right back out. I'll check it again tomorrow. This doesn't fluctuate in colors all day long. It uses end of day data to grab those components and build them in there so that you can be consistent in your approach. If it's blue, like this here, it's telling me, hey, you need to look to bank profits. It's managing our profits, saying, hey, with 8 days left here on this trade, look to close that out. You've taken in 94% of what you stand to make. There's no sense in sitting around waiting to see if something can happen in the markets. Bank it and move on. If it's yellow, cautionary, right? Telling me, hey, just like a street light, there's no action needed, but I do want to pay attention to what's going on. I want to anticipate what might be happening in the next couple of days if the market continues against me. And then if it's orange, this is really where I feel you will love working with us, because now we're in a decision-making time where we need to consider making an adjustment to the trade, whether that's closing it out, fixing the trade, rolling it, whatever you want to call it. That needs to be addressed at this point in time. If we continue to hold and it triggers red, well, that's our line in the sand that, hey, we are getting out of this trade. No more taking on any additional risk. We're going to execute our exit plan and move on. Really that simple, you guys. And now that you have some background to that, let's go back to Theta Trader. And now you have some concept to that, right? So if I logged in and this were my account, well, I've got yellow. I'm eyes on this anyway. I knew that with 1 day left, but 2 days left, I've got 3 trades that are blue that I should be getting rid of the trades. 16 days left, I'm still green. I'm not even positive yet on it, but I'm still looking good. And then 23 days, I'm definitely taking action here. 23 days left, right? That's 3 weeks, more than 3 weeks. Anything can happen. I'm going to bank that profit and move on. And then I've got these other 3 just going. So I'm out and done. Minutes a day. That's it, minutes. Okay, that's the RTI. Now let me show you how it would work on a day-to-day situation. Now you'll all have access to the simulator, and you can go and pick points of time and see what the theta trades were for that day, and watch the RTI work and see what kind of decisions you would have made using it. So let's go back to the fall where we had some volatility. Let's bring in some volatility here and show you how this works. See if we can get some decision making in here. So I'm picking Halloween. I'm going to trade through the volatile indexes over the fall, right? And let's just take, this will be December expiration. So mid-December, this will expire. We'll get a good month and a half of view here. And you all know how to look at this chart, right? This is an iron condor, so I want the market to stay below 29.30 and above 23.55. It's really just that simple, you guys. I mean, there's nothing more to it, right? Down below, I want you to pay, as I play through this and we go through the day-by-day situation, there's two areas. You're going to focus on the profit loss because that's what you're all used to doing here, right? Or what I really want you to doing is focusing on the RTI, your decision-based mechanism, right? This is way too emotional. Having that RTI in place helps keep the emotions low and helps us make consistent decisions. Okay, so with that said, I'm going to hit play and you guys watch down below those two columns. So we're about a week into the trade. We haven't turned a profit on the trade, but we've had a green risk thermal the whole time. So let's go a little further. I'm actually profitable now, but nothing telling me, hey, bank it yet. Okay. Now, with 26 days left, right? I'm now blue. It's saying, hey, bank that profit. You're 75% of what you can make. You still have 26 days left on the trade. You need to look at banking that trade. That simple, okay? You can even automate this. You can put in your profile to automatically generate an order to close the position if you want. You don't even need to come in here and log in and do it. That's completely up to you. But you can have that in place. Let's see. Okay, so let's go look at another example. I'll get rid of the pen here. And let's go see how volatility let's play through the entire move in the S&P, which I really want to show you guys this. If I pick towards middle of November, and then we play, for those who were active in the markets and saw how volatile the S&P, Dow, and NASDAQ were during December, you know, really October, November, December, but really December got really crazy. Let's take a look at that. I'll take us into the third week of January so we can get get the entire move in on the downside. Again, focus on the two areas I showed you, the profit loss and the RTI as your decision maker. I'll pause that, see, back it up. With 50 days left, I've got a yellow RTI telling me, hey, warning, pay attention, nothing to do here, but you may have to take some action. Keep playing. And I actually get profitable in the trade, but nothing to bank profits from, nothing to do that way. I'm actually getting negative, and I trigger here with 29 days left. I trigger an orange. This is where I said you really like working with us, because now we can talk about an adjustment, what we should do with this position to close it out and move away from the risk here, okay? If we hold it for a day, if we decide, I'm not gonna, it's not red yet, I'm gonna just leave it for a day. If we hold it, whoa, can't get my, so then back it up here, whoop, here, what I want to do right here. Okay, then you can see this is right where it would have told me, hey, get out of that trade. Enough risk taking. You've done enough. I mean, you've taken on as much as you want to take. We don't want to take any more risk. We're getting out of that position. That's what that's telling you to do. Now, here's the interesting note. Look, the start of that period was the beginning of December. If you took a bigger chart, you'd see it's even longer, started before that. But this quick gap down in the markets started at the beginning of December, and this is towards the end of December, right before Christmas. This is Christmas Eve, right? 2341, 2796. That is a big move in the index, especially over a short period of time. Okay, that's a big move. And what I wanted to point out here, look, even though we had a giant move in the index, we still aren't quite to our strikes. We have a 2890 call and a 2300 put. That is nearly 600 points wide. What's the average move on an S&P, right? Currently, we're down $1.50 on the day, 1.5. I mean, nothing's really happening. So those are big moves, and they're going to happen, and they will happen from time to time. But this is why this is designed to work this way. So let's go back, if I can. Okay, so it's not going to let me. I know I'm going to go back and forth because I'm losing my view here, guys. Let's see. Okay, let me go back to Theta Trader, see if it will now let me. Yes, okay, now I can. It was hiding my mouse. I don't know why, but we'll go back to the dashboard again. Everything you need, nothing more. That's what this is designed for. Simple. In and out. Finding the trades you want, get them working, get selling some time, and let it do its job. Doesn't get much easier than that, and doesn't get any more cluttered than that. This is awesome stuff. Okay. Let's see here. Okay, so have I made you feel like this kid here? Am I just blowing you out of the water to drinking from the fire hose? I hope that's not the case. If you're new, don't even worry. You'll be comfortable with this in days, literally comfortable. This is awesome stuff. Can you see how Theta Trader really is the solution? How it really goes after those areas that we seem to struggle? And you can do it in just minutes a day. Here's what our clients say. I've been doing iron condor trades for over 6 years. Your indicator is the best tool for monitoring trades. Now, I promise you discover something new. I also know that I don't have unlimited time to sit and talk your ear off about how awesome this is. I know some of you are ready to get going as I speak anyway. So don't worry if you didn't know about this before, and don't worry if you're brand new or you're most experienced. You're going to love this, and it'll fit and apply to you. We have 2 tiers of memberships, and I want to show you how to get involved. You can get involved from the Theta Trader Pro side or the Elite side, and we'll go through those. So Theta Trader Pro and Pro Elite, everything comes with the Theta Trader platform, which includes that market bias indicator, the Theta Trades, the risk thermal indicator, the trade simulator, the trade builder, all of that. I didn't even go in the trade builder. You can put your own trade in there, and plug it in, whether it's a call spread, maybe it's a straddle or a butterfly. If you have you want to do that, it'll plug it in and place it for you. Total value for that platform, yearly value of $3,588. You also get trade scope and daily commentary. These are emails that you'll get talking about what's coming up in the markets, what to pay attention to. You have the daily commentary. If you miss the day session, you can find out kind of what moved the markets, what was the information, what kind of trades were done. You'll get all that. Total value of $2,952. And then you'll have online tutorials that'll review the material and make sure you have that. Access to social media community. And here is where Theta Trader Pro and Theta Trader Pro Elite separate. On the Elite side, you now have access to what I would compare like a trading caddy. All of the professional golfers in the world, right, they carry caddies, and that job is not just to carry the clubs. That job is to know the course, know the ins and outs of that course, know where to avoid, be able to talk with their pro, be there when they're in trouble, make decisions whether they should be going for it or laying up. Wouldn't you guys love that with your trading? So that's what you get with Theta Trader Pro Elite. You have now a trading caddy, and you can develop a relationship with that caddy, with that trading caddy, let's call it, discuss trade strategy, review trade history, have him or her monitor your account, and now you can even receive trade alerts right to your phone. You can have the trading advisors just send you trade alerts that you'll get via text, email, or you can receive a phone call. You receive the text, pull it open on your phone, and it shows you exactly what the trade recommendation is, what the risk is, what the profit levels are, and you say, you know what, I like that. You click on the green button and it places the trade for you right away. You click on the red button and that rejects it and communicates to your trading advisor that you're looking for something different. That easy. One-touch trading if you want it to be. So for someone with a busy life who doesn't have time to sit in front of my computer, Altivest is perfect. The best thing about Altivest are the trade alerts. Total value with the personal coaching and trade alerts, $11,964. And ask yourself, how much have you guys paid for personal coaching in the past? And was it unlimited? This is what you're getting. You now have access to our insider trading seminars, where we'll bring in people like Bluford Putnam from the CME or Steve Paoletti from the S&P floor. You learn and hear stories from them and meet other fellow theta traders and build those relationships. You guys will like these. Special events. If we're in your area, we're going to reach out, try to do dinner, try to do a ball game, something. We love to get to know our clients. You'll be invited to that. Theta Trader Advisory Platform, $3,588. Personal Trading Coach and Trade Alerts, $11,964. Trade Scope and Daily Commentary, $2,952. Total value, total package, $18,504. And ask yourself, if Theta Trader Pro Elite was able to be the one thing that worked and saves you all that time a month and allows you to cancel subscriptions and lowers that stress and aggravation, is it not worth that money? And the answer is simply yes. So we had two ways to offer Theta Trader Pro Elite, and that was we could offer for nothing and try to maximize capacity as soon as possible, or focus on the clients by appealing to elite traders, focus on those who would stay with us and not be swinging for the fences all the time. We want our clients to be sticky, and this is what we mean. I've had an Altivest account for 10 years. Started with Altivest in 2001. Back in 2012, I've been with Altivest for 13 years. Altivest since the beginning, 1999. Altivest client for over 15 years. That's what we want you saying. That's what we expect you to have as your experience. Total value, $18,504. And now if I cut it in half, you guys would be thinking this is a great deal, right? And obviously, I'm going to make an even better offer than this. But if it offers you these proprietary, sophisticated option spreads and saves you all that time a month and manages that risk reward and provides you that licensed, experienced trading advisor, would it not be worth the $9,252? And of course it is, right? Others have paid tens of thousands to get involved with Theta Trader. And now I'm going to make you kind of a March Madness offer here. It really only does run through tomorrow, which is the last business day of March, right? So I'm going to over deliver here. You have Theta Trader Pro and Theta Trader Pro Elite. Theta Trader Pro Elite, there's our normal price, $1,997. That's it. All of that, $1,997. Now I told you it's March Madness here, so I'm going to cut it by 1,000 and take 20% off by tomorrow. So if you get involved, $797, one-time lifetime fee, that's it. No more, you're not paying an upgrade later on, you're not getting additional upsells. That's it, lifetime access, $797 to Theta Trader, okay? And you have a 30-day guarantee to the Pro Elite. $797. You only are committing some time, really. So if you're done listening to me, don't want to hear about the other bonuses, go to cf.altivest.com/TT-investing20. TT Investing 20 to get started. You fill out your information, get going, we'll reach out to you, get you introduced to your trading advisor and get you working with us. Get a demo account set up, get you all going. If you got more questions, you can call us, 949-220-2720. So that's Theta Trader Pro Elite, $797 with a 30-day guarantee. Come on, you guys, it's nothing. So Let's look at Theta Trader Pro. For those who don't want the trade alerts, don't want to necessarily work with somebody, just want to have access to the platform, be able to trade and do your thing. Normal price $9.97. We've cut it in half, but we're taking one step further for the last 2 days of the month. $247 through tomorrow. That's it. $247. cf.altivest.com, TT Invest 20, and you can get started right away. Now, some bonuses to this. You'll still have with Theta Trader Pro, I should say, you'll still have a couple sessions with the trading advisor to make sure you're up and comfortable using the platform and know what's going on. So don't worry there. This type of trading comes with a special tax treatment, which is known as a 60/40 rule, which means if I have, let's take, for example, typical stock trading, I take 100,000, I generate a 20% return. That's 20%. That's 20,000 that needs to be taxed. To compare apples to apples, we need to be in the highest tax bracket, which is 37%. That's a $7,400 tax. Brings my return after taxes to 12.6 from 20, right? Doing the same thing using these options on futures indexes, like we're talking here, I now get to apply the 60/40 rule. So that means of the 20,000 that needs to be taxed, the first 60% is taxed at long-term capital gains, and the remaining 40% is taxed at short-term capital gains. So my overall tax of $5,360 or a tax savings of over $2,000. Big difference in a short-term capacity here. Also, I get a 1099 at the end of each year. I don't have to itemize these trades anymore. Profit loss statement, that's all I have. All I have to do, plug it in, 60/40 rule applies, and done. So you now have two choices, of how to get involved. You can first do nothing, take no action, that's 100% risk-free, as well as reward-free. Or second, become a member now in return for tremendous value. And this is it, $797, Theta Trader Pro Elite, and it's limited and capped, and this is why, because we pride ourselves in that one-on-one service. We can't provide that to everybody, and we don't know how long it'll be available, so take advantage of it. Through tomorrow, $797, it. Okay, the brilliant algo trading system has never failed me, neither did my helpful Altivest advisor. Types of accounts you can trade from, these are my #1 questions. Yes, you can trade an IRA if that's your preference. That is available. You have individual, joint, corporate, LLC, and trust accounts. If you want it for even less than $797, fund your account with 100,000 or more, and we'll rebate the $797 to you. Just ask us for details there. Remember the secrets of trading success here. Option trading experience matters. Full-time trading isn't glamorous, and stock picking is too difficult. Can you see how Theta Trader attacks these areas? These common problems we all deal with. Can you see how Theta Trader helps you in these areas? More from our clients. Altivest exceeds my expectations with their pre-selected Theta trades. Responding to a trade alert takes about a minute or two, and I do not need to spend time at my computer. Remember, the call to action here by Tony Robbins, change is inevitable, progress is optional. Look to make that change. You guys, this is an awesome offering. This is good through tomorrow night. You'll see that if you go to cf.altivest.com, TT Investing 20, don't forget the 20, that takes that 20% discount to the $797 or $247, but you got to get signed up by tomorrow. If you got questions, give us a call, 949-220-2720. Otherwise, just fill it out. We'll reach out to you, get a time set up with you to get things going, and I really do appreciate all your time. I appreciate you spending some time with me. I hope you found it very valuable. I know you're probably pretty excited to get this going. We're excited to work with you. Give us a call or just get started, and we will reach out to you shortly. Again, I appreciate everybody's time. Thanks for being here. Best of luck in all your trading, and best of luck in the rest of March Madness here too. Thanks, guys.